Welcome to Markets Now. I'm Michelle Rook with Garrett Toay, AgTraderTalk. Mixed trade on Thursday in the grain and livestock futures. Garrett, let's talk about the grains. First of all, corn and soybeans kind of gave up some early strength. How much of that was just technical selling pressure?
I think, there's some technical. I mean, we had that headline overnight about the Ukraine shutting down their export corridor because Russia was supposedly dropping some mines along the corridor. All along the time, the fact that we don't have both sides involved in any sort of grain export corridor, this kind of thing kind of underlines the fact that, this could fall apart at any point. However, as the day wears on, Ukraine officials came out and denied that the corridor shut down, and that kind of eased things a little bit. That at least corn, I think wheat still closed higher despite all the rumors and denials and whatnot, but corn was impacted. So to me, it tells me the market might not have been trading that too much. The fact of the matter is, I think that there was talk a month ago that, China had booked, upwards of 10, 12 cargoes of Ukraine corn with whatever sort of corridor there is available out there. That might have impacted it. But at the end of the day, I think that, the volumes that they're going to be able to achieve out of this corridor and alternative of areas just aren't going to be, large. They're not going to be sizable amounts.
Yeah. We also had, though, a pretty good turn in the outside markets. Equities down, crude oil down, the dollar up. And a lot of that has been, some of this risk aversion. It is impacting the grains, isn't it?
It's impacting the greens. It's impacting the meats.
Yes.
It's been a rough week in meats. I don't know if there's an element of the trade. It's the macro side of things. You have two sides of the coin. You have one side that believes that we've had high interest rates for 9 months now. A lot of the economic data looks pretty good, and the market is seemingly adjusting to this high interest rate environment fairly well. Old timers will say, well, we know what happened in the 80s and interest rates, doubled from here. Does this give the Fed that kind of option to go that route? On the other hand, you've got the European Union data coming out suggesting that there might be a recession out there. It certainly feels, a lot of people in the meat market, even though, you're having a divergence here. You've got a large, managed money long in the meats, especially live cattle. We all know how tight the live cattle story is. But the market's come off the pressure. They use the cattle on feed report as an excuse. That was a day or two event. We had a nice bounce on Tuesday after Monday's shellacking, but we just couldn't hold the gains. So, but at the same time, cash is still tight, and I'm talking about cattle here. Cash is still tight, and the front end spreads are starting to firm again, reflecting that. So it might be an overall. Are we trading? Is the commodity markets in general trying to factor in a recession in 2024? And they're trying to get out of the way a little bit here, and then the markets that have true strong fundamentals are going to be the ones that kind of show their true colors and hold their own. And maybe cattle's it, especially as strong as cash is, as strong as box beef values are, that that type of true money is going to pull us out of the abyss, if you will.
Yeah. So let's also talk about corn, soybean export news. Pretty good this morning. We had another flash sale to China. We had a marketing year high for soybean exports, and meal exports were good, but yet we faded that. That was also a bit disappointing.
It is. Rome wasn't built in a day. The arrow is pointing up on exports, I believe. Corn, soybeans, even wheat. I'm more friendly soybeans and wheat for 2024 than corn. China being around would definitely help. I think the key thing is in the last week, there had been rumors that China had bought a couple cargoes of corn off the P&W.
Right.
Nothing showed up in export sales this morning, confirming that. So that's a bit of a disappointment. But the Brazilian corn is more expensive. We're competitive. We should pick up additional business. If we see 2 or 3, 4 weeks of this continue, then, and allow that demand to build, then we'll be able to build an even better base here towards these seasonal lows.
Yeah, let's talk about the fact technically the seasonal lows look like they might be in for both corn and soybeans. We went up though, tested the 100-day moving average in corn, couldn't get through it. And so are we going to stay sideways in both corn and soybeans for a while here unless we get some South American weather problem or what?
Yes, and that's a very good point. We could be on the cusp of a South American weather event. Southern Brazil is seeing some rain. Northern Brazil remains relatively dry. But yeah, we've tested the seasonal lows. We ran up to $5. We saw farmers selling. As part of a technical analysis, if we go back and test those seasonal lows and we hold, then yes, for definitively we've put in a seasonal low. But that's key. I don't know if we get to that point where we actually test those seasonal lows again. We're pretty close. I do think, if we don't hold 475, we're talking 450 corn, and with margins where there are out here and everything else, I think that I don't think these corn is a 450 ticket item. You got to remember as well is that, if we go to 450, I don't think the downside is very deep here in soybeans. I think downside in soybeans is relatively limited. We still have a 5.3% stocks to use. We still potentially have some yield variability or yield adjustments between now and January. And we have, we're the export market now. The strong exports that we're seeing right now, it's still a repercussion of the Brazilian long tail. This is export sales that we're seeing today should have been the kind of business we should have been seeing 6 weeks ago. And it's just the fact of the matter is that, Brazil had the bigger crop, had cheaper grains, and they just undercut us, into our harvest. But now we're kind of into it, and we should be the market at least through January and potentially early February, depending on these southern planting delays.
So the wheat market was able to hold gains despite what you said about the Ukraine export corridor rumor the story being not confirmed. And so was that just short covering that we saw here today in the wheat market?
It sure seems like it. It's Chicago led the way all day, and if it wasn't export related because they bought Kansas City, they bought Minneapolis, and they were the two laggards. It was largely soft red wheat, and I think it was largely technical that we got down and are testing these key areas.
What about this cattle market? You're a technician. Have we put a top in, do you think, Garrett? I'm sure you're getting a lot of questions about that, especially after Monday's action.
Yeah, absolutely. I think we're trying to find value. The headwinds are going to be increasing here because it's obvious that the funds now want out. So we're going to have a changing dynamic in the market where, it was a lot of fun when the funds were on our side working, when the market rallied, they were adding to it and everything. But this is a transitioning market. And I think, like I said earlier, I don't know what the reason is. Are we pricing in a recession next year? Or is this just, we're coming into year end? People want to adjust positions and end positions and reevaluate for 2024. But yes, it does feel that the top is in. It's going to be very difficult. Cattle and feed number was bearish, but at the same time, I don't think anything's changed. We're feeding the largest number of heifers on record. There's 1 million less head than there were this point last year. It's just we're in the sorting out phase of this market. It's not the easy uptrend that we had been in since May.
Yeah, but I agree with you. The outside market or the macroeconomic concerns have certainly spooked some of these funds out of that market. What about hogs? Funds have pretty much gotten out of most of their long in the hog market now. We scored new contract lows yesterday or the day before. We've bounced off that level. So are we done going down?
It sure seems like it, and we had a nice day today. These and Feb were up $1. So, I think I quote unquote think the $66 level is a fairly decent support. We had a nice upside breakout day today. If we see another update, if we can see another update tomorrow, we could potentially challenge this downtrend. If that's the case, then maybe we can get back up to that 70, 71 level here. That would give us a better answer as far as whether we have actually bottomed this hog market or not. We're at a kind of an interesting point in a juncture where things could turn here pretty quickly.
Okay, we'll see. Thanks so much for joining us, Garrett Toy, with AgTraderTalk. That is Markets Now.